Well, for more on the commodity slump, we welcome Axel Merk. He's President and Chief Investment Officer of Merk Investments and joins us live from Palo Alto, California. Thank you for joining us.
My pleasure.
So we've seen oil dip below $30 a barrel Tuesday, and some analysts are even calling for oil at $20 a barrel. How realistic is that?
Well, I wonder where those analysts were when oil was at $90 or $100 a barrel. The good news about people calling for $20 or even $10, somebody was calling today, is that now we finally might be able to find a bottom. As of late, it was almost risk-free to bet against oil. Everybody says oil is going to go lower. And now, as positions are a little bit of extreme, well, at least in the short term, we might get a bounce. Now, having said that, the fundamentals don't speak for higher oil prices. We have a higher production now than we had when this entire turmoil started. We haven't had enough producers go out of business or cut back production. And so on a fundamental basis, it's going to take a while to work through the issues that the industry has.
Now, as you mentioned, some of these producers, a lot of them also in emerging economies. How do you think this ongoing price drop is going to affect these countries that are so reliant on commodities?
Well, I mean, it's like anything. If you have just one problem, you can handle it. But if you have multiple problems, then it becomes a crunch. You just talked about Brazil. I was in Sao Paulo a couple of weeks ago, and the government has huge fiscal problems. One of the problems they have is that, for example, everything is linked to inflation, all the entitlements on the benefits. And that's already a huge problem. And then on top of that, on top of bad fiscal management, you now have the price of oil plunging. And it's just a perfect recipe for disaster. And so similarly, of course, a country like Saudi Arabia, in order to keep the social peace, they increased benefits and they have to cut them back now. It's not a good time to cut them back. A place like Russia has challenges as well, and they do it by showing a brave face internationally. But yes, it's a challenge. A country like Malaysia, that's also an oil exporter, they are comparatively well off because they have a comparatively well-run country. But yes, it's a huge, huge challenge to all these countries.
And Axel, you mentioned the potential for reaching the bottom, and OPEC seems confident that oil will rebound eventually when exploration gets too expensive and perhaps US shale drilling cools off. But this latest price drop has some members at each other's throats calling for an emergency meeting to halt oil production. Is it time to turn off the pumps or perhaps wait till their meeting in June?
Well, I mean, the challenge is that everybody cheats, of course, in these meetings, and they can have all the meetings they want, but Iran wants to go back online. It seems that in Libya, the government, or the two governments they have, might have a truce, so to speak. That might get more production online. And so, yes, they can talk about cutting. And of course, in the US, you will have a bunch of the marginal producers drop out. But the fracking industry in the US in particular is not a very high-cost production. I mean, they have a high fixed cost, but it's not a very high cost to get into the business. So should oil prices recover, the production will be ramped back up. And so there'll always be a marginal producer. And so that's a pretty gloomy forecast for the industry for years to come, and which conversely, of course, means less investment is going to take place. And at some point, that will be a good reason to have a bottom then yet again. But in the short term, they have big problems. Yes, they'll have emergency meetings. They'll have announcements of emergency cuts. But it should give people food for thought that, for example, in Saudi Arabia, when they executed the cleric earlier this year, the price of oil did not shoot up. Historically, that would have been the case. That means sentiment is extremely negative. And yes, we'll see a rally in the short term, but the fundamentals, again, are really in very bad shape.
Now, one of the things we're seeing is a lot of bankruptcies. We're also seeing a lot of commodity companies taking a lot of layoffs. So what does this mean in terms of the global workforce? How worried should they be?
Well, I mean, we see transitions happening. If you look in the US, for example, many people have been surprised that despite people having jobs, that we haven't seen any wage growth. And part of that is that we've been losing well-paying jobs. We've been losing jobs in the oil industry. And in there, we have been putting up jobs. We've been getting jobs in the service sector that are much lower paid. And so in the US, it's a diverse economy, and we kind of muddle through with that. But if you have an economy that's very dependent on that, it's a bit of an issue. Australia is comparatively well off as well. They are more on the hard commodity side than oil. But despite the massive layoffs, employment has been holding up, and some people say that that will have to change. But still, if you have an economy that's not diversified, those are big issues. And of course, the companies, they have to lay people off because they have to be healthy to survive this. And a lot of the big companies are saying we have to make the adjustment for much lower prices. And that conversely, of course, means that investment is going to be down substantially. And yes, that's a drag on global investments.
Well, Axel, we'll have to leave it there. But thank you so much for joining us. Axel Merk, President and Chief Investment Officer of Merk Investments.